We've got Ravi Gupta, CFO, joining us now. Good morning, Ravi. Thank you very much for joining.
Good morning.
Not very good news, really. It seems to be down on several parameters. EBITDA is down. Margins have taken a beating. Would you at least have the confidence to say that this was perhaps a troughing out quarter and third quarter looks better already?
We believe that second half definitely will be better than the first half, for sure, in terms of the same-store growth. However, when we look at the consumer sentiment, as my friend in the Titan also said, that discretionary spends, we have not yet seen that it has been growing, and consumers are not back in a hoard saying and spending the money on discretionary spends right now. So when we look at Q1 versus Q2, the sale has been stable. It has not been declining further. Okay. Although in terms of same-store growth, you're saying minus 2.4 to minus 5.4, but that was primarily because last year in the Q2, we had a buy one get one scheme which was advertised on TV, and this buy one get one scheme was every Wednesday. And that was the prime reason that in numerical terms, the same-store growth seemed to have declined, but in absolute terms, in Q2, the sales has not declined, which is a good news that further decline has been arrested. But we are not very hopeful saying that in immediately next second half, the sales will climb up significantly. We believe the sale will grow slowly, and maybe in 4 to 8 quarters, we are confident the sale will be back in terms of high single-digit same-store growth, or even could be a double-digit same-store growth.
That is next quarter you're talking about, not the current one.
No, we are not talking about next 2 quarters. We are saying next 2 quarters definitely should be better than in terms of same-store growth than the first 2 quarters. But in 4 to 8 quarters, definitely we can go back to high single-digit to a double-digit kind of same-store sales growth.
Okay. Mr. Gupta, we actually have a query that has been written into us for you. Archana writes in from Hyderabad. It's on the same-store sales growth trend itself. She asks whether it has bottomed out and what is the outlook. You just answered part of that question. So I'm going to add to that, asking you about the margins. This time around, not only has same-store sales growth declined, margins too have gone down to about 12%. What's the outlook on that as well?
See, sales and margins are closely linked together. When I say the sales has stabilized in the Q2, in the sense it has not gone down vis-a-vis Q1 to Q2, margins are also almost stable. In Q1, we had a margin of 12.4%. In Q2, it is marginally down to 12.2%. And the reason for the marginal decrease in the margins were that minimum wages have gone up in several states, and also our annual increments in the salary also happens in the month of July. So this quarter, there was an additional impact of the salary increase, whether it is the team member or other people. So there is a marginal decline. Over a period of time, next 2 quarters, it gets absorbed and comes back in the normal routine. So going forward, if the sale gets stabilized, the margin also should be stable. They should not decline any more further. But when we go back to the high digits same-store sales growth, we believe that margins also should start increasing and start growing further.
Okay, let's look at expansions now. You all have put in 37 stores against a promised 35 stores in the second quarter. Ravi, how is the free cash flow situation? And therefore, what are you looking at in terms of expansions?
Actually, we don't give guidance about quarter-wise how many stores will open. What we have given a guidance was 150 stores we are going to open for Domino's Pizza, and in addition 25 stores we will open for Dunkin' Donuts. In terms of Domino's, we are very, very clear that we will definitely open 150 stores. In the first half, we opened already 71. So in the second half, we need to open another 79 stores to meet the target of 150 restaurants. In terms of Dunkin' Donuts, we have given a guidance of 25, which we have revised yesterday to 30 restaurants. We are confident that Dunkin' Donuts will do very well. We have already taken Dunkin' Donuts to Bombay and Bangalore. Both those launches has brought immense reclaim. Consumers are very happy. There were queues outside both the restaurant when we launched in Bombay and Bangalore. So we are confident that we can open more stores. The second part of the question was situation of the free cash flows. In the beginning of the year, we had about 100 crores lying in the bank or the mutual funds. At the September end also, a similar amount has been lying. However, we believe by the end of the year, we will be able to consume all of this cash, and the primary reason is that we are growing very aggressively. In aggregate, we will open about 180 stores for both Domino's and Dunkin' Donuts. In addition, we are expanding to 3 new commissaries. One is Guwahati, one is Nagpur and Hyderabad. Three new commissaries will be ready by March. I think 2 commissaries may be ready within this quarter itself. And the 4th commissary is very large commissary we are establishing in Greater Noida, which will be relocation of Noida commissary. And for this we already purchased the land and construction will start very soon.
Okay. We have noticed that the competitive pressures in the industry have increased. So given that, do you think you will be able to take the price hikes in order to mitigate the raw material cost pressures?
Yes, it is right that competitive intensity has increased, but when you look at across the categories, the price increase has been there across. When you look at any of the top 5 brands or even other brands, there have been price increases consistently. Touch wood, we have been seeing a benign commodity price trends, and we don't know whether we need to continue to increase prices, because we keep on continuously monitoring how much price increase we need to have in order to sustain the margins and in order to not to put the consumers away. So we believe that price increase we can still take. In past also we have consistently taken price increases about 2.5 to 3% every 6 months or so. We believe that kind of price increase consumers absorb, and when inflation is coming down in the consumer's mind, he will have more discretionary money in his hand, and consumers will not mind paying little higher money price on pizzas.
Okay, so would you say your margins have troughed out? Because, the general inflation of the products you use appears to be falling.
Yeah, in commodity prices it has been falling, but one area which we say will never fall is a personal cost. We believe that minimum wages and other salaries will continue to go up, and this is the head we typically say we don't expect any kind of leverage despite the productivity gains which happens all across.
Okay. What are the promotional or ad expenses that you will have to incur? I understand that your buy one get one free promotion has been discontinued, but anything else that's currently underway, and what would be the run rate of expenses on that front?
See, overall in advertising we spend about 5 to 6% of the sales. So this is one of the costs. Second cost comes in the terms of discounting, how much we discount. So while we've discontinued buy one get one, which we had every Wednesday last year in Q2 and part of the Q3, in a limited way we still continue with the buy one get one. So one Friday every month we continue with the buy one get one, and the reason that we say one Friday we continue is it is a Friday which is not an announced Friday. It is announced in that morning, so the consumer cannot plan his purchases. The behavior we have observed last year in Q2 was the consumer started planning his purchases. He used to there used to be cannibalization. Thursday sale used to come to Wednesday, and Tuesday sale used to get postponed to Wednesday.
Since we have you with us, today is a Friday. Are you giving us that discount today?
No, today is not a discount day. So there is a surprise for the consumer always. We announce through SMSs and Facebook that mechanism. Today is not a discount day.
Okay, on that slightly unhappy note.
Continuing with this kind of offers, and
okay, on that slightly unhappy note, thank you very much, Ravi Gupta, for joining us.
Thank you.